Fantastic. Well, welcome everyone to the launch of BGV's fourth Impact and Learning Report. It's wonderful to have you all with us. This is actually the first time we've done an event for our Impact Report, so we really hope that it's a chance to bring it to life for you and also to open it up to questions. I'm sure you're all aware of who we are, but for those of you who are new to us, Bethnal Green Ventures is Europe's leading early stage tech for good VC. We invest in ambitious founders using tech to tackle social and environmental problems at scale. So as a tech for good investor, delivering and supporting positive impact is core to our approach. These annual impact reports provide us the opportunity to share our journey and progress on our commitment to that. We're also big believers in the importance of transparency and radical transparency at that, and being part of something bigger. So we also hope that our learnings from the past year can become your insights too and help contribute to a thriving wider tech for good ecosystem. As you will have likely also seen, we're particularly excited this year to be sharing what we believe to be two VC industry firsts. And we'll come to those in due course just to keep you hanging on. But first, I'd really love to run through some key reflections from BGV and our portfolios 2020. So it goes without saying that 2020 was a year like no other, and unfortunately there was untold devastation for many people. But in the context of tech for good, we were incredibly impressed by the way that our portfolio responded to the wider challenges faced by millions of people. And as you'll see in the report, we share a number of examples of how our portfolio ventures were positioned to respond to the challenges thrown up by the crisis. And I thought I'd bring a couple of those to life here for you. So the first being Organise, who are a platform for workplace campaigning, who really did give frontline and particularly low-income workers a collective voice amongst the chaos that many were thrown into. As an example, they successfully launched campaigns for fairer working conditions through lockdown for delivery drivers at Uber Eats, Deliveroo and Just Eat. Proving just how incredibly needed their product was, Organise's membership grew from 80,000 at the start of 2020 to more than 1 million in less than 10 months. Another fantastic example was Dr. Doctor, who are on the forefront of digital healthcare as a patient communication platform. And in the response to the pandemic, they rapidly rolled out a number of new products to help hospitals deal with the crisis. For example, their broadcast messaging tool helped hospitals to efficiently battle the rise of misinformation about the virus. And they reached over 330,000 patients in the first few months of the crisis. So it could be said if any sector was fortuitously positioned for what happened in 2020, it was tech for good. Many individuals and industries were required to adopt digital alternatives almost overnight, and it really did shine a light on many social and environmental systems that just aren't working. At BGV, we certainly saw people reacting to these challenges and realizations as we received a marked increase in the amount of talented founders pitching us tech for good solutions. And in fact, we received our highest number of applications ever, over 300 to our most recent program, which just kicked off last week, and they are a fantastic bunch. And of course, we were also required at BGV to practice what we preach, pivoting our flagship program to an entirely remote offering. Of course, this wasn't without its challenges, but we did quickly adapt, and it was great to see fantastic feedback from the participating founders. Our remote support also saw us make 326, albeit virtual, introductions between the portfolio and the wider BGV network of investors, mentors and experts. And we also delivered a series of post-program portfolio support sessions and workshops covering the likes of inclusive hiring all the way through to fundraising for ventures who were raising investment in understandably extremely challenging economic conditions. And some other key highlights for BGV came as at the start of the year, we were named by Financial Times back Sifted as one of the top 25 UK VCs and also one of Europe's top impact investors. We also announced £3 million of additional investment from our LPs Big Society Capital. And another major highlight for us was achieving one of our first meaningful exits from portfolio company Overleaf, who were acquired by Digital Science. So I'm now just going to share a bit more with you on how we've built out our impact practices over the last year, and also how we continue to refine the way that we approach impact at BGV. So in last year's report, we shared our impact methodology, including the frameworks we use to structure our reporting, such as nested standards of evidence and the impact management project. And in this year's report, we've expanded on our alignments with the IMP, which I'll talk through briefly now. So the IMP's impact class matrix, which you can see on the screen now, is a globally recognized framework for categorizing investors' impact. At BGV, we work at the sharp end of this. And as you can see here, we're categorized as C6, which basically means we sit in the box at the most far right and far bottom. What this means is that our portfolio companies are actively contributing to solutions, often with a view to closing the gap of inequality, while as investors, we're extreme in our contribution to those ventures. And two key concepts when it comes to our contribution are additionality and engagement, which I'll dive a bit further into here. So additionality is the way that as investors, we avoid conflating the impact of our portfolio with our own impact, which is really important. Of course, we can't lay claim to all the positive outcomes delivered by our portfolio companies, but the role that we as an investor plays in our portfolio companies' launch and growth is a very valid marker for impact. And at BGV, we're nearly always the first investor into our portfolio companies, so we do play a crucial role in their chances of success. So the additionality at BGV is significant because many of the companies we support wouldn't exist or go on to be successful without the crucial, genuinely early stage investment we provide. And in fact, 34% of portfolio companies believe that without BGV, their product or service would not have existed today. And then when it comes to engagement, we also score highly. So initially, we provide high-touch support through our intensive 12-week program that every portfolio venture goes through, and then with ongoing follow-on support from our team and networks. And as an early stage investor, we join our founders at the first stop on their journey, and we help them to shape both their commercial and impact strategy to ensure both are aligned and optimized for success. And as part of measuring our impact as an investor, we collect responses from our portfolio on their view to our support, just as we saw with the additionality. And it's great to see that 50% of our portfolio companies believe that without BGV, they would not have been as far along in taking their product to market. So when it comes to helping our companies report on their impact in the most meaningful way possible, we help them identify a single key impact metric, which is unique to their business. So I'm going to talk a bit through validating impact as a tech for good venture. So we help our companies identify that single key impact metric, which is unique to their business, and we ask them to report on this to us on a regular basis. We also use an end-of-year survey to collect more in-depth information on their impact management practices. So from these responses, we found that 44% of BGV's portfolio ventures were actively assessing how much of their impact is attributed to them. And 14% of our ventures reported that they're not aware of alternative products that achieve the same outcome. In this year's report, we also included some founder stories on how exactly some ventures are validating their impact. And so we hear from some founders about the way that they're doing this, from the likes of conducting pilots with the World Health Organization to designing a carbon calculator with the London Waste and Recycling Board. So I hope that's given you a bit more insight into the work we've been doing on our impact practices over the last year. Before I hand over to Melanie to talk a bit more in depth about our portfolio and the results from our D&I survey, I'm just going to check the chat to see if anyone has any particular questions on any of that. Looks like lots of people are just saying hello, which is really lovely. So with that, I will hand over to Melanie to talk through our next section. Hello, Melanie. Let me spotlight you so everyone can see you.
Seems to have worked.
Yeah, there you are.
Lovely. Hello, good morning. Thank you for joining us. It's a pleasure to be here this morning and unveiling our fourth impact report. Thank you to Millie for a great run through there of some of the thinking behind the report, and of course some of the really interesting stuff that it's helped us highlight. I'm going to take a step back now and talk about our portfolio from an overarching perspective. Millie has already singled out a few examples of what companies in the portfolio have been doing in 2020, and we've also got the opportunity to hear from one of our founders later on in the session. So I'm going to talk in the round about the portfolio, and then I'm really excited actually to be talking about the people that make up that portfolio, whose bright ideas and hard work actually contribute to what I'm about to tell you in terms of the portfolio's performance. So without further ado, let's just call a spade, as Millie has alluded to. 2020 was an incredibly challenging year for people everywhere, but also for business. Huge economic uncertainty, significant change in very short spaces of time. And we really were impressed by the response that we saw from our portfolio companies. They really did pivot overnight, change their service and delivery models, meet huge surges in demand, but they also were not as a group immune from the challenges and the difficulties that last year presented. So many of them had customers or supply chains that were significantly disrupted or affected by the pandemic. And particularly the economic uncertainty led to a very, very difficult and challenging fundraising environment, certainly in the first half of the year. So for that reason, we're actually incredibly pleased that when we look at the valuation of our portfolio, so how much the total realised and unrealised value of our investments is, that at the end of the year, so at the end of 2020, that was nearly double, 1.9 times the amount of capital that we had invested into those businesses. So they are worth nearly twice what we have put in. And given the year that was, we think that's a phenomenal achievement. They lost ground in the first half of the year as the initial shock impacted them, and they recovered that in the second half of the year. So we actually finished level with where we started, comparable to last year at that 1.9 times ratio of value to cost. So a really sterling performance, and we attribute that not least to the hard work of the teams in that portfolio, but also in particular we think that's a real testament to two things. Firstly, the significant diversification within our portfolio. So our companies span a whole range of technology sectors, customer groups, but also business models and markets. And we think that really helped them be resilient throughout the unprecedented times. But also we think it's a real testament to the fact that Tech for Good is all about serving needs, not wants. It is about building businesses that genuinely tackle the most pressing social and environmental problems and challenges that we as a society face. And one thing that we really saw from last year and continue to see now is that attention, whether that's in the minds of consumers, organizations, government policymakers and investors, is really around, well, what actually matters? What has the pandemic highlighted is important, and how do we want to go forwards from this kind of significant opportunity to reset that has presented itself. So we think Tech for Good is really well placed to deliver and intrinsic value in the businesses that thrive in those kind of conditions. And we think that was actually really reinforced by the fact that despite the really challenging fundraising conditions that I've referred to, 3 of our companies achieved what we consider as an early stage investor a really significant milestone in confirming the value and the potential of their businesses. And 3 of our companies, one from each of our investment themes, raised successful Series A rounds during 2020. So Commonplace from our Better Society impact theme, Dr. Doctor from Healthy Lives, and Piccolo from A Sustainable Planet all successfully closed rounds. And we think that's a real validation by other investors as well about the potential for tech for good. So that's a really great bellwether for us. Millie has also mentioned that we had our first meaningful exit in the year. So, you know, a really important year despite such a challenging environment. So incredibly pleased to report on those things. Millie, could I ask you, there we go, to skip on to the next slide as if by magic. So when I talk about our portfolio, what do I mean? Well, by the end of 2020, we had invested in 141 early stage companies, and we had 78 active ventures. So we have a very large number of companies, and this is partly that diversification that I previously referred to. We've had 2 exits so far, and when we look at the spread of companies by our impact themes, you'll see that the largest impact theme is Better Society. Closely followed by around 1/3 of our companies in the Healthy Lives sector, and then our smallest impact theme by number of companies is A Sustainable Planet, around 20%. We've actually, you'll find in the report, there's some additional detail around the particular impact outcomes that those companies are pursuing. And when we map the impact objectives of our portfolio against the United Nations Sustainable Development Goals, they actually cover 15 out of those 17 SDGs. So a really broad range of impacts that each of those companies is working towards. So a little bit about the companies themselves in terms of the traction and the growth that they achieved during 2020. Their resilience, their adaptiveness is really played out in these figures. So we saw a 38% increase in users of products and services provided by our portfolio in the year. So at the end of the year, by the end of 2020, there were nearly 17 million users of products produced by the BGV portfolio, which is huge compared to last year's 12 million. So a massive increase. We also saw revenues, a really great indicator of the kind of the commercial value and attractiveness of the propositions that our companies are putting together, also grow significantly, increasing from 29.5 million at the end of 2019 to just over 46 million by the end of the year. And again, both of those stats are really demonstrating yes, the amazing response of our portfolio and in some cases significant increases in demand for their products and services as a result of the pandemic, but also actually a real maturity of some of the business models and an adoption by the mainstream of tech for good propositions. So Fairphone, for example, saw a significant increase in sales of their ethical modular smartphone with the launch of the 3rd version of their handset and the Fairphone 3 Plus midway through the year. So we've actually seen them move beyond what could be considered relatively niche or sort of early adopter markets and into more mainstream audiences. And tech for good is really starting to penetrate the mainstream, and we think these are great kind of examples of how that's happening. We've also noticed that investors, similarly, particularly later stage investors, are beginning to share our view, and so our companies have now raised nearly £100 million in additional funding beyond the initial capital that we provided. So we're really unlocking significant amounts of capital for tech for good as well. Okay, so that was a very brief run through, and there's obviously lots more data and information in the report about how our portfolio has performed overall in the year. But I'm really honoured and excited to share now some insights about the people that work within that portfolio. It's great to be able to talk about our portfolio in the round, but essentially it boils down to the brilliant ideas and an awful lot of hard work by the individuals within those companies in that portfolio. At BGV, we have for a long time, ever since we started, been committed to backing and investing in diverse founders. It's something that we don't just think is morally sound, but actually makes great commercial sense. We believe that diverse teams, and studies also show, build better businesses and generate better returns and results. So it's something that we've been committed to for a while, and that's why we think it is so important in our learning and impact reports to really share how we're doing against that principle and against that commitment. in some ways, it's increasingly important as more and more attention starts to look at who makes up the individuals within particularly VC portfolios, to really kind of walk the talk. We want to share our data. We think it's really important to be open about who is in our portfolio and to be clear about how we want to continue to measure and improve upon that, to really level the playing field, to really make sure that we are backing the diverse founders that we set out to do. A few notes on approach before I share with you some of the stats. We conducted a survey of the founders in our portfolio, and the reason we picked founders as opposed to management teams is because when we make our very initial investment decision, as generally the first investor into a company, they tend to only be a very small founding team of perhaps 1 to 3 individuals. As they scale and grow, they definitely grow their management teams and add numerous other talented individuals to their teams. But we thought it was really important as an early stage investor to look at who is in the team when we make our first decision to invest in that company. So we've surveyed founders, and we've used a range of best practices and government guidelines to frame our questions and to categorize the responses we've received. And the coverage of our survey of our data is around about 61% of the total number of founders in our portfolio. Millie, if you skip on, I don't expect you to squint to see the individual data that's shown in the screenshot there, but if you refer to page 17 in your copy of the report, you will be able to see all of the information that we've gathered. And where possible, we have tried to find suitable benchmarks to report against, whether those are official government statistics, industry reports, etc. Because we think it is super important not just to look at where we are and see how that compares, but also to identify where we need to improve and what additional steps we want to take as an organisation to improve the diversity of people within our portfolio and really level the playing field when it comes to access to VC investment. So here's a few highlights from the results. So 37% of the founders in our portfolio identify as coming from an ethnic minority background, and nearly 16% of them identify as LGBTQIA. But there are a whole host of factors that we think are really, really relevant to understand. And so we are the first European VC to share and collect such extensive data. So we've gone beyond the usual markers of age, gender, disability, for example, to look at things like what is a founder's highest level of education, but also a whole range of other markers that have been highlighted in studies as being barriers to accessing VC investment, or certainly underrepresented when recipients of VC investment are analysed as a whole. So we've looked at things like, for example, whether someone is a first-time founder, whether they have caring responsibilities, whether they are a first-generation citizen or an immigrant. All of those things and the intersectionality of those factors we think is really, really important to understand and to track if we are genuinely going to change and level the playing field when it comes to accessing VC investment. So this is just the start of a journey for us. We're incredibly proud to be the first VC to put this data out there and to be this transparent. But we will continue to report this. We will show you where we need to go next, and we will consistently report against each of these data points. In particular, this has been really useful for us as an exercise to identify where we need to do more. So, for example, we're doing pretty well when it comes to gender diversity. Over 40% of our founders identify as female. But when we look at the proportion of our founders that perhaps have caring responsibilities, that's about 16% compared to a benchmark of around 46, 47%. So that's definitely made us question what we can do in terms of the support and our investment offer to attract more people with caring responsibilities into tech for good and into starting businesses in this space. So it's been super helpful for us, and we really want this to be a call for action for other investors to start to think about their own portfolios in the same way. Finally, this is a useful stat. Again, in the report, there is more detail, but there is an often quoted survey which was released by the BVCA in 2017, which talked about the fact that less than 1 pence in every pound of VC investment went to female-led teams. This is our comparable stats. We've been tracking and reporting on this for a number of years. So in 2020, for every £1 that we invested, 34p went to all women teams, 41p to all male teams, and 25p went to mixed gender teams. We think that compares incredibly favourably, and we're really proud of that stat, but we will continue to report and improve upon it. And we actually want to be able to report similar data for a whole range of those diversity metrics that I've just summarised that we've begun collecting in future reports, because we think it's really important to have this kind of radical transparency that really helps see where our investment and where others' investment is really going. There's loads in the report for you to digest. Please do dive in and let us know if you have any questions. I think it just falls to me just to round up this section by really saying that we really strongly believe that the diversity of the founders in our portfolio absolutely must reflect the diversity of the people that are affected by the social and environmental problems their businesses are seeking to address. Measuring this, publishing it, being open about it is just the start. We want to continue to track and improve on our metrics so that we see that diversity really coming to life in our portfolio, but also in the broader VC ecosystem as well. Millie.
Thanks, Melanie. I think we have a quick question that I wonder if you could answer for us. Someone, Assad, has said that they are curious about how BGV calculates the value of their investments. I know from previous experience that's hard to do. Can you let everyone know how we do that?
Yes, of course. I'll not bore you too much with the details, but we have a valuation policy which is based on industry best practice and guidelines, which essentially looks at the fair market value of our investments in each of our companies, typically based on recent external pricing events. That was a bit jargony, but essentially, if a company raises money at a valuation that is higher than the valuation we initially invested, we will revalue our investment up to that latest price.
Great. And Guy, BGV founder, actually asks, how do we recommend we present the measurements of our impact KPI? Any thoughts on that, Melanie?
Well, I think in terms of BGV, we ask each of our teams to report their impact KPI to us in a very simple form each quarter and their progress against it. But in terms of companies themselves sharing their impact measurement with their own stakeholders, I think that's actually something that's really important and interesting. And we've seen some of our teams really starting to think about that. Some have generated great reports that they share with their customers, for example, showing how much their customers have saved in carbon emissions by virtue of using their service. And others publish their stats perhaps on their social media channels or their websites. So I think openness is a really important part of the puzzle, and then and consistency and comparability, so people can see how you're doing over time against the metric that best represents the impact you're delivering.
And final question that I'm going to throw at you, Melanie, is Nathan Griffiths asks, he's interested to know in how the number and quality of investment opportunities today compare with 5 to 6 years ago.
Yeah, so I would defer to Dharma on the exact number of applications we received for each of our accelerator programs 5 to 6 years ago. I suspect it was in the sort of 150 to 200 applications mark, and we've probably seen close to 100% increase since then. So certainly a big uptick in the number of people pitching us great tech for good ventures over that period of time. But the quality has certainly improved as well. People are so much more kind of well equipped to understand what building a hugely scalable tech business involves, what it takes, what skills are needed, what kind of capital is needed as well, has really, really people have improved their awareness and understanding of that. But we also think there's just so much more inspiration out there now. There are so many great businesses tackling social and environmental problems at scale, that more and more talented people from all walks of life are really passionate about setting up businesses in this area. So yeah, we've definitely seen an improvement on both of those benchmarks.
Great, thanks, Melanie.
No worries. Millie, can I leave to you to hand over to our next speaker?
Yes, absolutely, you can do. So thanks, Melanie. That was a great overview of our portfolio. And next, we're really excited to have BGV board member Amanda Feldman and all-round impact expert and leader. And Amanda is going to talk us through what we believe to be a global VC first in mapping the risks of our portfolio's unintended consequences. So without further ado, Amanda, I will hand over to you.
Thanks, Millie, and hi, everyone. Excited to be here again. For those of you who come and read BGV's impact reports every year, there's always something new, something exciting, something market leading, and props to the team for really taking a big step and a big leap each year. As you've already seen, BGV uses the impact management project consensus to help work with their portfolio companies and measure and manage the impact of their portfolio and support portfolio companies over time improve their own measurement and management of impact. And I'll pop the link in the chat in case anyone's unfamiliar with the impact management project, but it's a public good and anyone, there you go, Dama, can use it, can reference some of the shared learning resources online and a number of case studies. So what I want to do is really spotlight what is unique about this year's report from BGV, because you've already seen over many years, including this year, that BGV maps to the investor's impact matrix, which was covered earlier by Melly. So what that looks like is the impact of a portfolio company and the portfolio overall, and then what BGV does to contribute to the impact of their portfolio, which, as Millie said, is critical to making sure that an investor is not overclaiming or claiming that they've created the impact that actually the portfolio companies are working hard to create. That said, in that process of engagement, in that process of working with the portfolio, there are 5 dimensions of impact that the impact management project suggests to track at the company level. The 5 dimensions are what is happening, what outcomes are being created, positive or negative for people on the planet, who is experiencing those outcomes, and were they underserved in relation to them, how much of that impact is being created, is it happening at scale or likely to happen at scale for early stage companies, is it occurring in a deep way, and is it lasting for a long time, duration, is it likely better than what's out there, and critically there's a 5th one called impact risk. In finance, we're very used to putting our money into investments, expecting a return, but recognizing there's a risk that we lose our money, that we feel the loss of our money. But for impact, we might all on this call be seeking to create impact, positive impact for people on the planet. But the risk that that doesn't happen or doesn't happen as expected, we often don't feel. It doesn't hit our pockets in the way that financial risk does. So impact risk is something that we really need to and can start tracking, observing, and trying to mitigate in the impact investing field and just in investment in general. So impact risk is something that often investors are asking more about. What are the key impact risks of your company? Where might impact not occur as expected or go wrong? And BGV has gone a step further in this report. Not only did they ask their portfolio companies what is happening in terms of impact risk in the portfolio, and 78% of the portfolio actively assesses some of these risks arising from their products and their services. But they also asked, how are you trying to mitigate them? If they are high risks to the impact of your company, are you putting mitigation measures in place? And 77% identify that there's ways in which they're mitigating as they grow their company. So first of all, asking the question about impact risk is the first step, and BGV has really worked closely with the portfolio to ask, are you identifying impact risks and are you mitigating them? And then how can we help? On the right-hand side of this slide, though, you'll also see a bit of a heat map of which impact risks were most referenced when it came to tech startups in BGV's portfolio. Within that, 33% flagged unexpected impact risk as a key risk. What is that? That is saying that there's unexpected impacts that are related to the product that weren't sort of planned or weren't part of how the product was created, but they're tracking. For example, with tech, an example is increased screen time. Could there be mitigation measures? I know the whole tech community is working to figure that out. Could there be in-app prompts for fixed usage and use of voice technologies, especially when it comes to kids or younger users? So there are a number of unexpected impact risks. How can we work to mitigate them once we observe them? The second most common impact risk was stakeholder participation risk. This risk focuses on what the person or the planet, but stakeholders generally experience while using the product, and what their experience is telling them about the impact. This could be different and may be different than what we think the impact should be. So for example, for one company, there could be a trigger of negative emotions while doing mental health exercises. The point is to create positive mental health outcomes. But if any of those exercises are triggering, there could be negative emotions for the stakeholder that influence their whole experience, and therefore the impact of that company's product. Mitigation often includes bringing in experts, bringing in other resources to make sure that there's exit strategies, ways to access other help beyond the app. But an example of many different types of stakeholder participation risk we're seeing across the portfolio. This is especially important when we focus impact on the experience of the stakeholder, right? Impact is what the people and planet are experiencing as a result of our products. And so this one is really core to the impact we hope to create in the world. There are many others. I won't go through them all because there's lots more to talk about on this call, but you can dive into the report. Actually, typically with these kind of companies, one of the biggest risks is actually a smaller one here. And I think this is because BGV does such a great job of vetting their portfolio and the companies that join. For example, execution risk usually has to do with the team. Is the team executing and able to deliver a product that actually achieves the outcome? BGV is looking for teams that have the skills and the motivation to make sure that that impact is being achieved and is incorporating into them the product every day. So execution risk is there, but a little lower. Same with evidence risk is often a huge one. Do we know what's happening? It's often the most popular. If we can't find out whether positive impact is being created or negative impact, we don't know anything at all, and it's a huge risk to impact. That is only 5% of BGV's portfolio feels like evidence risk is a high risk for their company. So I'll stop there, Millie. Happy to take any questions and really suggest people have a look, if they haven't ever thought about the impact risk of their company or their portfolio, to have a look at the impact risks in the BGV impact report this year. And kudos to the team for being, as far as I know, the first investor to report on impact risks across their portfolio, including sort of mitigation strategies they're seeing and supporting.
Amazing. Thank you so much, Amanda. Oh, we've got a quick question coming here that maybe you can help us answer from an anonymous attendee. How do you measure the risk impact for an environmental solution not working when the climate situation is so dire? That's a good one.
A great one. So impact risk when it comes to the environment is a great one. And some of these impact risks, like stakeholder participation, I wish the environment and nature could speak, but sadly they can't. So there's some that aren't as relevant for climate companies. I think when we talk about impact risk, a key thing to remember is we're not trying to fully avoid impact risk. Sometimes we have to take impact risk for higher impact return. Same with finance, right? We have to sometimes take more risk for higher return. So I think when I think about the environment, I think we have to be sure to mitigate any risks to people and the planet in our investments. And actually for some climate solutions, it is thinking about what is increasingly being called like the just transition. If we're doing a lot around climate and really important climate products to save the planet, are we considering impact risks to other stakeholders, including people in local communities who might be negatively affected by that intervention? But overall, higher impact risks needs to be mitigated, identified and mitigated. So of course, if there is a product, a tech that is going to save the planet we live on, we should be building it, we should be launching it, we should just be conscious of the impact risks that it might create and try to mitigate them as much as possible. This isn't about avoiding risk, it's just about acknowledging it and trying to reduce it as much as we can.
Brilliant. Thanks, Amanda. Fantastic. Well, with that, the next section that we have is a venture story from one of our portfolio companies. So in each year we report, in each year's report, we always feature a number of venture stories from our portfolio to really bring to life what tech for good businesses look like in action. And so we thought we'd bring that to life even further in today's event. So we're really delighted to have Mersal Hadiat, who's co-founder and CEO of Chatterbox, there she is, with us to talk through her recent successes, both impact and commercial, and what's next. So as we talk, Mersal, I'm going to stop sharing screen so everyone can see our faces and put you there. Fantastic. So yeah, if you could just introduce yourself first of all, Mersal, and Chatterbox, that would be fantastic.
Of course. So my name's Mersal. I'm the CEO and co-founder of Chatterbox. And you know, we were on the BGV program many years ago. The company, as with most startups, has had many pivots to where it is now. But we operate in the language learning industry, which is a huge market. The parent industry is about $360 billion in size. And as we all know, the online segment's been growing like crazy over the past decade or so, especially with the impacts of COVID. It's estimated to grow by $22 billion just in the next 3 years. So it's a great space to be in and a great space to create economic opportunities, which is what Chatterbox is all about. From a product side, we as a company think that the first generation of language learning tools are a bit crap, that they don't do what they're supposed to do. I mean, we've all downloaded Duolingo and deleted it from our phones 2 weeks later. And the general consensus in online learning is that blended solutions are best, the ones that marry together humans and technology. But there's already a global teacher shortage. That's a fact. The global teacher population is just in the tens of millions, and where the millions and millions of qualified and expert language teachers are going to need to come in to service this growing demand for language learning worldwide is a problem within the market. It leads to poor quality learning outcomes and so on. And so our approach at Chatterbox to solve this problem is novel in 2 ways. First, from a tech perspective, what we've built is what we call a human in the loop language learning model, which is able to deliver a soon to be university accredited language learning experience with totally untrained and unqualified language teachers, native linguists, to deliver the courses themselves. But what's also really special is that I mentioned the economic opportunities that Chatterbox creates. Well, all of our language coaches at Chatterbox are degree educated professionals, often with decades of experience in fields including academia, the law, sciences, and so on. But they're all unemployed or underemployed. And that's because they're refugees or their parents stepping back into the labour market after career breaks, and so on and so on. All of these instances of economic exclusion that we've all become quite immune to, but that Chatterbox we think is a huge waste of talent. So the last pivot we did was at the start of 2020, after we closed our pre-seed round led by Founders Factory. And since then we've had a quite a crazy year, bringing on board some of the biggest corporate clients possible in the market. Unilever, McKinsey, and PwC are some of our first clients. The revenue's kind of been growing at over 30% month on month since we launched the product. And we're also in the really happy position to be closing our seed round in the next few weeks.
Amazing, a lot been happening for you and the team. So yeah, as you mentioned, there's lots been going on, and in the report we talk about some of the kind of commercial opportunities around. We've recently secured, for example, 12 key enterprise contracts since you launched your B2B offering. Can you talk a little bit more about these partnerships and the opportunity they provide for scale, both impact and commercially?
We're now at 15. It's the numbers are growing faster than our team is, unfortunately. So we're in that really delicious position of trying to change the wheels of our car while it's still going. But I think what's important to consider is that an important feature of the language learning market, as we all know, is that there are just tons of startups vying for space. It's a really exciting space to be in. Most VCs have a bet in the market, but what that means is that there's just, a huge number of companies vying for the attention of corporates and individual learners. So differentiation is really, really important. And that's where our impact story has been one of the most powerful assets we could possibly have. We are building Rosetta Stone for the conscious capitalism age. And it's a really powerful message to take to, the 30 to 50% of individual learners and individual consumers who make purchasing decisions based on social impact, and the 95% of S&P 500 companies who publicly proclaim their alignment with the ESG goals. And so in doing so, I think what it's done is to help open the door to some of these huge corporates within which we have ample scope to grow. We land within one country office of PwC, and we sell into the group over time. There's also a really interesting opportunity, and one that will be developing further now that our seed round is closing, to not just be able to provide the skills and talents of our target population via language learning, but also to enable the large corporates we work with to hire directly from our talent pool. And this is where our impact will be deepened greatly, and where me and my co-founder are probably most excited about taking Chatterbox next.
Absolutely. And I suppose it's also nice, obviously it's great to be able to share your progress and what you're doing as we're supporting you as investors. It's also really fantastic to hear the kind of like the direct outcome for the people that you're working with and your users, and to sort of be able to see that chain of impact move along. And is there kind of a tangible sort of story or example you can give from perhaps a refugee or a language teacher that brings that to life?
For sure. So one of our first language coaches was Wajid, who had been an English language, a primary school teacher in Syria, actually. And her story would have been like the same as my mother's if Chatterbox hadn't been around. Her husband had proudly kept her university degree and certification as a teacher, but those certifications became worthless in the UK. Before we met her, no job she'd applied for had replied to her again, and she felt lacking in motivation, lacking in aspiration, just looking around at her her friends and family who'd achieved also very little with the significant accomplishments that they'd brought with them from Syria. And so what happened to my mother in a very similar circumstance is that she became unemployed for over 10 years, occasionally worked as a cleaner, and when she came back into the labour market, her CV was not one that employers really wanted to pick up. Instead, with Wajid's involvement in Chatterbox, being able to work as a language coach, earn an income, be able to gain confidence and motivation by actually using her skills to train professionals within corporates around the world. We've been able to write her references to study a master's degree in education, which she recently graduated. And years and years later, she's still a language coach on our platform. So we have been able to demonstrate that working at Chatterbox has an uplifting effect on the employability of the people in our talent pool, but also, perhaps more importantly, that they love working with us so much that they're willing to stay no matter how their life circumstances change and how they improve over time.
Amazing. And we've just got about a minute or so left. So is there anything you kind of want to share in terms of what's next for Chatterbox, and anything that anyone on the call here could maybe help you with?
Great question. So of course, we're about to close our seed round, which is being led by GMG Ventures. And this is just such an exciting moment for a 2 female co-founded team to be within the 1% of, female founded ventures that actually get VC backed, is a real kind of privilege. And we want to do a good job. We want to, take Chatterbox to its full scale. And what's needed right now is for us to build our first kind of leadership and core team. And so anyone who can help us find our colleagues of the future and help to build the strongest team possible for Chatterbox across, we're a remote team, so we look at talent around the world, but specifically in London and Lisbon, where the co-founders are based. So anyone who can help with that, please do reach out.
Amazing. Thanks so much, Marcel. Maybe you can, there's a few questions coming through in the chat, so maybe you can answer those in the chat over the last sort of 10 minutes of the call. But thank you ever so much for joining us.
Thank you for inviting me, Millie.
Oh, most welcome. Fantastic. So we have, just about 7 minutes left. And with that, I would love to share some final insights from the report. So we'll hop back onto the slides. So while our investment thesis is very much centered around delivering positive impact at scale and supporting businesses such as Chatterbox and the like, we also very much believe in the impact that we have both on our own team at BGV and the wider ecosystem. So with that, our final section is a quick overview of our work on both aspects that I've mentioned over the past year. So in last year's report, again, we were one of the first VCs that we know of to publish data on our own team's diversity and engagement. And in 2020, we continue to actively measure and report on this data. So when it comes to BGV's team diversity, here it is at a glance. We see that 67% of our team identify as women and 33% as men. And 42% identify as coming from an ethnic minority background. And in terms of how the team perceive fairness at BGV, because it's not just enough to have a diverse team, it also has to be an inclusive and fair one. We found that 85% of the team believe that their job performance is evaluated fairly, while 100% believe that people from all backgrounds have equal opportunities to succeed at BGV, which is incredibly important to us. And despite a goes without saying uncertain year for people all around the world, BGV's overall engagement score came out at 87, which is up 12 points from our previous year and 18 points higher than Cultram's global benchmark. So given that we were all flung into sort of remote corners of the UK and beyond, to see a really high engagement score within the team is again a fantastic outcome. And as you'll be able to see in the report, we also go into further detail on how we bake in diversity, equity and inclusion practices at BGV as a business. And a few examples of these are our people, policies and initiatives, such as mental health days for all staff, and also the use of an online recruitment tool called Be Applied, which helps minimize biases when we are hiring. So looking at the work beyond BGV in our portfolio, we also continue to grow the wider Tech for Good ecosystem throughout 2020. And the past year saw the relaunch of our Tech for Good global platform with a number of new features such as jobs boards, resources and a Slack group. And by the end of the year, those resources had been viewed nearly 40,000 times, and our content on social media was viewed 1.3 million times. So it's really fantastic to continue to see more and more people involved in Tech for Good. And actually, according to Tech Nation, investments into European impact startups in 2019 reached 6 billion euros. So in addition to our own stats and findings, we think this is a really strong bellwether for Tech for Good as a core part of that trend. And indeed, the father of British venture capital, Sir Ronald Cohen, was recently quoted as saying that tech for good is a major change. It's what the new generation of entrepreneurs want to achieve, and it's what investors want today. So what's next for BGV? Well, it's a case of doubling down on our work of the past 9 years. We're really committed to cultivating a future where the functions of both business and technology are harnessed to their greatest potential to solve real problems, where business models intrinsically link a positive impact and commercial success so that making the world a better place becomes self-sustaining, and where the diversity of people solving these problems reflects the diversity of people they affect. So if you're a founder that has an amazing tech for good idea or an investor that sees the same potential as us, you can get in touch on those links that are on the screen now. That brings us almost to time. We perhaps have a couple of minutes to check if there's any final questions. I see Chansu, my colleague, raised her hand. Chansu, I'm not sure if there's anything you wanted to share. If so, then please do put it in the chat. And let's see, chat. How can we join the group, Dharma? If you could put in the link to the Tech for Good group, that would be fantastic. Chansu says that was a mistake. She's just throwing in a curveball at the end. Fantastic. Okay, well, I think all that leaves to say is thank you ever so much for joining us. Thank you to Melanie, to Amanda, to Marcel, to Dharma. Please do let us know what you think of the report once you've had a bit more time to digest it. Please do share it around. We're putting it on social, so again, please do share those. And really hope to see some of you maybe in the real world sometime soon. Thanks ever so much, everyone.